insightful conversation at a time with the rising stars in finance, business, and tech on Substack. And we bring it to you. And the purpose is so that you can grow and protect your net worth and your net happiness. I'm Chris Snook. Today, I am joined all the way from France. Martin Tixier, aka Mr. Tix or Macronomics on Substack. So as you fill in the room, give them a big hello in the chat. Let us know you can hear us okay. If you're listening to this replay on our podcast, thank you for tuning in on the audio. You want to catch the video, all places video are, or on Substack, feel free to subscribe to Martin as well. And give him a thanks for being here. Martin, welcome to the Atomic Level.
Well, thanks for having me. Great to finally having the pleasure to participate in one of your events.
Well, we're excited to get to know you. And as the recurring audience knows, I don't know anything about the guest other than the basics before we go. So we've never had a conversation before. And this is our first conversation. We're going to have a great conversation. I'm looking forward to it. We know some mutual people. You got introduced to me on WhatsApp via Anthony Peters, who writes also on Substack for a very select group of the world's central bankers and some really important macro thinkers. And he was apparently your mentor, but a long time ago. But I'm looking forward to getting to know your work. You've got a rising Substack yourself, and we want to welcome those guests as well as mine to this. But just start with where we shaped our worldview from. So, what was your background, your upbringing, whatever seems relevant that kind of shaped the view and the lens that you operate from today. We'll start there and then we'll kind of take it as it goes.
Oh yeah. Basically, I always had international exposure from a very young age. My parents put me in a bilingual school where I started learning English when I was 5 years old, and I was in that school with a lot of people from all over the world, different religions, different countries. That really started shaping my worldviews, having been with all these people. So now I have friends from all over the world in different locations. And after being in that school, I joined the ESSEC BBA, so to have international exposure. So I did a BBA at this French business school, and I was always passionate about finance. I always wanted to work into markets. I had a first internship in Geneva, being an assistant trader on Japanese bonds issued in French francs on the primary market, and then throughout my studies, I did a lot of internships within trading rooms. I ended up working in London for many years, and that's where I met Anthony Peters when I joined Bank of America, and he was my mentor because I became a flow credit sales for quite a few years. And then I moved onto something else from the sell side to the buy side. But yes, I have a background into credit. I was selling credit. There is investment grade bonds, high yield asset-backed securities to a variety of clients, family offices, asset managers, hedge funds, loan books from banks. So a variety of players, but focusing mainly on credit. That's what shaped my views. And I've always have like a very, very big thirst for learning. I've always been extremely curious. And I've always had like very long discussions with the head of credit research at Bank of America, sitting with him, trying to understand everything. And I've always been passionate about macro markets. So that's how I really tried to shape my views for many, many years. It started extensively.
Did that curiosity get applied into, your passion for markets and understanding them? Did that come from a curiosity as a child and something else? Was your father or your mother somehow related into finance or markets? Like where did your first sense of curiosity begin, and then when did it start to really kind of shift into macro? Was it just because of the career arc at the university, or was there something else that triggered that?
My father really shaped me by having me read a lot of classical economic books. I studied economics at school as well, and he made me start reading quite a few different books. One of the most important ones was probably Jacques Rueff, The Monetary Scene of the West, that starts shaping my interest. I also get acquainted very early on, around 2005 to 2006, to Gave Research. We had prop traders at Bank of America who were subscribing to Gave-Cal research. So that's where I really also started reading a lot about asset allocation, macro, and I've read and I've read and I've read from that. Uh, my father was not into finance at all, but he pointed me to some of the books I should read, and I read extensively on that. There was also some very key books that shaped my views about my interest into economics. One being Angus Maddison, who's a former chief economist at OECD, who wrote an incredible book which is called Contours of the World Economy, from 0 AD to 2030 projection, and he really mapped the evolution of world economics from year zero to projection to 2030, and the work he has done is it's absolutely incredible. So
So
that's from reading.
a lot of times when we read a great book like that or something like that, it's so rich with references that typically the thread that I've seen is just a love of history or a passion for understanding history. And so did you kind of in an earlier age when you were coming up, whatever was the first catalyst in the economics, did you also kind of try and understand it through the historical lens or other
Yes.
geopolitical things? And if so, what are some of the favorite books that shaped you in that regard as far as how
Yeah.
you the world organized?
Well, Angus Madison was one of the books. It was also the books by Jacques Rueff, The Monetary Scene of the West. Another great thinker, which really opened my mind a little bit later on, but it's fantastic work, is the work done by Sir James Goldsmith. He wrote two books, one called 1993 called The Trap, and it was followed by another one in 1994 called The Response, which really totally changed my view about macroeconomics, understanding trade deficit, understanding the situation where we stand right now in world economics, because he saw everything which is happening right now. He wrote about it in 1993. And he was warning about globalization, saying, hang on, guys, back in 93, saying, if you open the world like you want to open it, you're going to destroy your local communities. You're going to destroy your industrial basis. Uh, be careful what you're doing, because it's not going to end up in a nice way. And he was warning people about that back in 1993. He was a staunch opponent to the GATT. He was a staunch opponent to opening all the borders, including China, to the World Trade Organization, saying, guys, if you do this, okay, you're going to increase your net profit margins by 20-25% because you're going to offshore everything there. But you're going to end up bankrupting yourself by destroying your local communities. And when you see like the attempt of the new U.S. administration to reshore, to recreate an industrial basis, that's where we are. Uh,
Mm.
Warnings were there in 1993. At the same time, you had like French Nobel Prize economics Maurice Allais, who warned about the exact same things. It was liberals said, "Hang on, guys. Okay, it's good to globalize, but you have to be careful there because it will have local consequences."
Interesting. I'm not familiar with his work, and so I'll have to look into it. One of the books that similar time frame that you may have read or not, but was called The Fourth Turning, which was
Yes,
actually a
absolutely.
lot of macro guys have read that one. It was a book that I discovered later. I found it about 10 years after it was written during the GFC because I was looking for a pattern recognition that I didn't have to understand it in the context. And so it became one of my favorite kind of books that shaped my bias or worldview. And similarly, as it was written, I think originally in '97 by Howe and Strauss,
Yes,
who had written generations before that, it really looked at the demographic archetypes and those things for those unfamiliar with it and these cycles of time. So the '90s was actually a really interesting and important period that I think we skip over. It was interesting with Garrett Baldwin a couple shows ago. We spoke about the '90s at length and how a lot of folks focus on 1971 and, Nixon's removal of the gold standard or Bretton Woods, or we go back to the 20s and we look at where are we now. But very few people other than Garrett have I heard talk about the 90s in a way that is beyond just, oh, we removed Glass-Steagall, right? There was a lot happening,
yes,
especially from a global perspective. So that's why I'm really excited to kind of unpack it from you. You've been in France and London primarily, right? You're in France
Yes,
now. How long
yes,
have you
and
been back?
Paris.
Yeah, so
Uh,
how long have you been back in Paris since you left London?
well, first I was in London from 1998 until 2011. Then I stayed 5 years in Brussels. I worked on the buy side for a large European asset manager, and then to end of 2016 I relocated to France. So I've been back for 10 years
Okay, so
in Paris.
you were in Brussels kind of really at the forget when the EU actually formed, but you were at Brussels kind of in the heyday.
Yeah, I was. Well, I was in Brussels at. I studied in Brussels 2011. So really at the beginning of the European crisis,
Mm.
sovereign crisis. So it was very
Yeah,
interesting period
Gre
of time.
Greece kinda really started to
Yeah,
unwind, like, in, like,
yeah.
2010, right, or 20 somewhere in there?
Absolutely. In 2011, you had a huge financial crisis. Like you nearly had a total collapse of the European banking sector in 2011. People don't realize, but we came very close, and the ECB came to the rescue. By the end of 2011, they introduced what was called the long-term refinancing operations, number one and number two. So they basically thrown out free money to banks to recap because they were in dire straits. They didn't have access to U.S. dollars anymore. The Fed came to the rescue of the ECB as well by establishing swap lines. But I remember that you could see CDS spreads blowing out for financials, both on the senior space and subordinated space. You had a lot of like bond tenders. It was a big mess for the European financial sector at the time.
So, let's go back to kind of the Bank of America years and then forward, and t talk to me about your day-to-day, like, what were you doing then, and what was your purview? Meaning, like, what were you selling or what were you interfacing with on the customer side in that first era, and what years was that? Then, um, as that's evolved or stayed the same, because 'cause I'm not sure if you're still doing the same thing or if you're doing
No,
something different. I'm curious about kind of what it was that you were, doing on the product side, who the customer set was that you were interfacing with, and then what
yeah.
the time horizon is, and then what parallels or what patterns you see emerging today that kinda taught you
It's
through that.
great question because there's a lot of parallel I've seen with 2007 credit wise. So I was at Bank America. I was made redundant just after Anthony Peters. He was part of the first wave of redundancies. I was part of wave 2 or 3. I was made redundant.
What does that mean? Does that mean, like, layoffs, or does that mean
Yeah,
something? Okay.
there was massive layoff at the time because the financial crisis in the credit space was building
Right,
up
okay.
speed. And Anthony left Bank America. I was part of the first wave of massive layoffs. I was part of wave number 3. We had a January cut, and we had a April, May cut. I was part of the third wave, but it was really when things were really getting hot on the credit markets. We saw what was happening in credit way before equities, guys, because credit is the heart of the economy. Without credit, you don't have macro. So that's why I think it's very important to focus on both macroeconomics and credit. If you don't understand both, you don't understand really the real picture because equity market is fun, but it's a very small market relative to credit. Credit is the big one, and
Well,
and
and, you know,
and,
and I
and it's the driving seat of the economy.
yes, simply put, in plain speak, right, if you look at modern money or currency, regardless of dollars, euros, whatever, all it is tokenized debt.
Yeah,
So if you think about the money supply and you think about it as an asset class, it's just essentially debt. And so if you don't understand the debt markets or credit, as it were, you don't understand the very supply of the thing you're trying to get
yeah.
more of.
Yeah,
And
I will give you a very simple answer to this, and it's quite interesting because I told you one of the very important book I read was The Monetary Sin of the West by Jacques Rueff. And he pointed out something very important, which is the double pyramid of credit. Why you have such a rally in the US equity markets and why the US market has outperformed hands down all European world's market, whatever very simple reason. If and I will explain you why. I put the cursor to January 2007, and if you look at the performance of the S&P 500 since January 2007, the compounded annual growth rate was around 8%. Now, if I take the compounded annual growth rate of the US national debt, it's the same compounding annual growth rate. It's around 8%. So it's what Jack Wife called the money illusion. So the growth of the US stock market is based on that. That's why the rally is fueled on that. So people said, hang on, earnings, whatever. Look at it. If you just superpose the United States debt with the S&P 500, you're going to see a straight line because they compound to roughly the same annual rate growth of around 8.3%.
I want to hear your response to this. So I try and not dumb this down, but make it easier for people to understand a lot of times, right? And how I've always explained that phenomenon, but I want you to kind of either fix it or make it tighter. Is why is a house in Miami worth $170 million or $250 million, right? Zuck just bought a house in Miami a couple of months ago for $170 million.
Yeah.
How is a house, one person's house, worth $170 million?
No.
And the reality is it has to be. And why I say that is because whether it's stock that's trading at 60 times forward earnings or revenue, and we go, well, that just doesn't make sense. When all money is debt, and when the very nature of the machine puts this dry powder that we call liquidity or whatever it is in someone's hands, it is no good sitting there. It has zero value and utility with kinetic energy sitting there doing nothing. So it has to go to work. And at some point, it can't find enough places to go to work because other people have accumulated more than they need. And so they have to allocate into deals. And so whether it's private equity funds or hedge funds or whatever it is, as this dry powder accumulates, which obviously we had a surplus of in the last, 10 to 15 years, at some point it just has to park itself somewhere productive. And as more of it does that, the values go up because it's got to for the very cap table that it is allocating. And so you get these breakout kind of winner take all power law kind of valuations, whether it's
absolutely
or a Mag 7. And
or Bitcoin as well.
Yeah, or whatever it is. The asset that gets chosen, whatever that asset may be, takes all the money because it has momentum, and because now that money goes, well, my money's safe because all the other money's in that deal. And you get these disproportionate, out of whack, quote unquote, nominal gain. But really what it is it's just a parking lot for excess liquidity that was used to prop up the whole system.
Absolutely. That's why I talk about the money illusion. There's something broke in 2022, okay, and you can clearly see it because it's the exact same starting point of the Ukraine-Russian war, and it marked the fact that the U.S. Treasuries lost their safe haven status. Because for me, the two biggest mistakes that the United States did was first they started weaponizing the U.S. dollar, like taking sanctions against French bank BNP, against Sudan. They started really using the dollar as a weapon, a geopolitical tool to impose their views on others and use it as a weapon. That was the first issue. The second biggest mistake they made was pushing Russia onto Chinese arms. Because on one hand, you have one of the largest commodity players in the world. On the other hand, you have the largest industrial producer in the world. So it's a perfect match. And it happened these guys also share a boundary. So they're sitting next to one another geographically. So that was quite stupid. And also something very, very bad, which was imposed to see for the rest of the world was the seizure of the Russian central bank reserves. And now it really changes the perception of all the world about the safety of their US dollars, because people started realizing, hang on, from one day to the next, if you don't like me, you can take my stuff. So that's why you've seen such a frenetic acceleration in gold coming back into central bank reserves. And the reason I'm mentioning that is that I talk about the money illusion, but I think that if you want to preserve your capital, you should use maybe gold as a new benchmark. So you want your performance equity-wise to be superior to what gold is doing. Gold is a thermometer, is just the value of money. It's just insurance against the collapse of the U.S. dollar per se. So that's why I think that maybe it should be seen as some kind of benchmark. So when I tend to look at asset allocation and my equity exposure, I want asset that performs better than gold. That's simple.
Mhm.
I'm I'm kind of a long-term view guy. I take simple views, but okay. If I look at the performance of the S&P 500 relative to the growth of the United States debts, which is, by the way, now above $38 trillion, I want to be in equities which are trading, which have the performance above the goal. And there's a lot of equities that can respond to this kind of stuff right now. Uh,
So, do you run a chart where you just, like, look at that equity's price in an ounce of gold? Is that how you kind of map it, or how
no,
do you
I just put my chart. I put gold and I put all my equities on a year-to-date basis, 1 year, 3 year, 5 year time frames, and I look at the compounded annual growth rates. Of course, I look at the fundamentals, the story behind the equity, the sector, and use it as a benchmark. Say, okay, let's see if I can stay above gold performance-wise on a 5 year basis, and what do I want to own and why? So if you think that we are entering a period of stagflation, which I think we are, because in any cases, war and inflationaries, and war and inflationaries in two bad ways. First, it increases prices everywhere. That's the first thing. Second thing, and you've seen it in sovereign yields, it increases the price of capital.
Mhm.
So that's why you see now, for example, we saw the news this morning. United Kingdom 10 years is trading above 5%, 5.10%, which is the highest levels reached since 1998. So the cost of capital is going up everywhere. Uh, People often talk about, yeah, but wait, maybe the Fed can cut or some central bank can cut. Yeah, they can. I mean, I think central banks they can have some say when it comes to the short end of the yield curve, but when it comes to the long end is depending on only one variable, which is fiscal discipline. And I will give you a very simple example. Now, Portugal, 10 year, Portugal is borrowing cheaper than France. And we're talking about 2011, the sovereign crisis in Europe. Why is Portugal suddenly on the long end of the curve borrowing cheaper than France? For a very simple reason: fiscal discipline. For the last 4 years, Portugal has an excess, has a budget surplus for the last 4 years in a row. So that's why they're borrowing cheaper on the long end, and no matter what the European Central Bank does, no matter what the U.S. Fed does, the only way they're going to be able to reduce the long end interest rates is by reinstoring fiscal discipline.
So, let me ask you a question related to the things that I think many people just go, "How is this happening?" And when we think about fraud, waste, abuse, and again, I wanna stay out of any kind of polarizing political frame here. I wanna understand it through the macro frame, right? There
Mm,
is there is a reason for everything.
absolutely. I
We
mean,
may not
no.
agree with that reason, but there's always a reason. So we may not agree a house should cost 170. It doesn't really matter. There's a reason for it, right? We already talked about it. So when you think about uh, foreign states, or in our case, domestic states over here that are currently being scrutinized and looked at for their misappropriation of funds, right? Forget the corruption side, forget all the obvious
Mhm.
things you go down. I just want to focus on your thoughts around why would we why would somebody want, regardless of the reason, political party, why would somebody want to spend into oblivion, have 250 to $1 trillion like California in
Yeah.
probable fraud?
Yeah.
that went to nowhere, right? Lined to certain people's but
Yeah.
forget who it lined. That's not the point. The point is we're talking about raising taxes, we're talking about wealth taxes, we're talking about all this, but we have not got any ounce of discipline in our fiscal or in our
Yeah.
state level spending. Why would that be a good move? Like, what does that serve?
Short-term views and political gains. I will give you an example.
It's that
Like,
simple. It's not
yeah,
something
yeah. I
that
will
it's
give you an
like,
example. I'm a history buff like Anthony Peters, and there's another book which was fantastic, which was written by Florent Aftalion about the economic consequences of the French Revolution and what triggered the French Revolution. And there's a part of the book which is absolutely fascinating. You had Mirabeau, who was a member of the French Parliament, and his mentor was Dupont de Nemours. Dupont de Nemours was the father of the two original founders of American company. Dupont de Nemours which is in fact French. And at the time, there were some discussions about putting the assets of the church as collateral for issuing debt, which were called assignats. And it was like money printing turbocharged. And in less than 3 years, the value of this assignat went from 100 to zero. You can check it out in 3 years. And and Dupont de Nemours knew it was totally stupid things to do. It was irrational. It was extremely dangerous. Mirabeau knew as well how dangerous it was, but he defended it in the parliament, and the measure was taken, and assignats started to be printing massively by the French government with dire consequences. And Dupont de Nemours pleaded to Mirabeau, said, "Don't do this. This is extremely stupid." But Mirabeau knew it was stupid, but he did it. And what happened to Dupont de Nemours? He had to hide himself for quite a few years, and he managed to escape France in 1794 to join his two sons in the US, and they founded Dupont de Nemours. But what what you're what you're saying, it's exactly what Mark Twain was saying. Like history doesn't repeat itself, but it rhymes, and it's all about short-termism, short-term gains, political gains. They all play the same games, regardless of the country, regardless of the location. It's about attaining a certain role, attaining a certain power, being control, regardless of the consequences.
it
Because perhaps
see,
we knew the consequences would be stupid, and they were stupid.
yeah, like, I guess, the intellectual side of me just wants there to be some reason I haven't thought of, and that it isn't just someone's short-sighted greed and need for power at all costs, or just for being propped up as the face that can, do a bunch of damage and then 3 years disappear or 4 years to
Yeah,
disappear because of the relationships, maybe get a slap on the wrist, not really have any consequences, and then come back, everybody forgets and use their charismatic thing to go start a company and whatever, and it just doesn't what it does is it makes me realize just how ignorant. And I don't mean that as, like, rude, I just mean, like, we don't know what we don't know in all areas. Everybody has that thing that we don't know, but nobody actually understands how the money works at scale, and so because of that, even people who, quote, unquote, "think they have figured out a lot of things in life or reached a certain level of success," don't really understand where the money comes from. And because they don't understand it, they buy into these idiotic schemes that
yeah,
just have there is no purpose. Like, there is no purpose other than short-term greed and mass destruction that someone else will deal with.
yeah, absolutely,
And so
absolutely.
then when someone comes out and says, "We're gonna be fiscally disciplined, we're gonna manage to a surplus, we're going to do this," everybody calls them or throws them under the bus for being a conspiracy theorist, but at the end of the day, we teach our kids, "Hey, don't spend outside your means," but we actually can't even say that because we're being spent for. Like, we're
Yeah,
the very nature of us being part of the
yeah.
machine
I would
is
say there's two type of debt. There's the productive one and the unproductive one. Productive one is very simple. If you look at what was achieved by Eisenhower in the U.S., like building the interstate
yeah,
network of motorways, that was fantastic. That was good debt. So
We
issuing
haven't
debt to.
improved so much since he did it. That's the problem is we've spent way more money now
Yeah,
pretending like we're gonna fix the roads or build
yeah,
high-speed rails, and
yeah,
we're still riding on the same highways Eisenhower built
yeah.
70 years ago.
Absolutely. If you want, if you want to build an economy on very solid track, you need the infrastructure, and that's very interesting because everyone is talking about the competition between China and the US relating to AI data centers. China has won. Why? Because they've been spending so much on infrastructure, on electric grid, on nuclear plants, on nuclear reactors, on solar power, on renewables, on the energy, all which is needed in size to be relevant for data centers and AI. And the fact that the US is behind because the electric grid needs a massive upgrade. The US electric grid needs a massive upgrade. You need as well new nuclear power station. You need the energy because end of the day, economic output is energy transformed. It's extremely basic. Uh,
I
that's a
have some
very simple
I have
rule.
some good friends like Connor Petroska and some other folks that are, running the Genesis mission and inside the administration, a mutual acquaintance. I don't call we're friendly, but I call him a friend because we've only interfaced a couple times, is Dario Gil, who's the Undersecretary of Science, and, I mean, I couldn't be more hopeful for the quality and caliber of intellect and humans that are currently at least leading that charge at DOE and at the, Department of Science and all that stuff, under Chris Wright at Energy. I think that, there's a couple ways to look at that, who won. I think it's too early personally, meaning I understand what you're saying. I think when you look at the infrastructure
Yes.
that's required, China has a lead. When you look at the technology and the innovation and those pieces, we have the lead. But the reality is both are required,
Yes.
and the one that's easier to knock off, right, is the innovation because physics isn't involved. So the infrastructure piece is a really key linchpin because even
Yes.
if you have other issues with your currency, with your middle class, with your young people lying flat, as they say, yeah, those things can be speed bumps, but at least you have the infrastructure for the power generation and you have a skill set, which is we know how to copy and knock stuff off, right? Whether it's DeepSeek coming out or
Yeah,
whatever. So
absolutely.
interesting to me to see the open source models to me, and I'm curious as to your opinion on this, since you made the statement about China has already won. What I see is China using their patience, right? Because they also have a longer term horizon,
Absolutely.
and let all the countries, whoever they may be, innovate, 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 create the frontier models, do all this. Because what we're going to do is we're going to open source all of that anyway. We're just going to
Yeah.
knock it off and open source it
Yeah.
because at the end of the day, they need power. And I really believed this will be contrarian and maybe piss people off, but again, political opinions aside, I really believe Iran was the only and last chess piece to play to put any leverage on China that could make them not take Taiwan and also have to really reconsider because the only choke point left that you can negotiate with. And so by doing, what's happening right now, I feel like it was the lever that allows for a Xi Trump meeting to actually go somewhere versus just be talk. Because both sides have to negotiate, but now there's kind of like a
Yeah. There's no disconnection between the US and China. It's impossible. Both needs one another. Let's be very clear. Like the US need the gas turbines to power the data centers, which they don't have. The US need the copper electrodes, the copper pieces, the electric parts that goes and help build data centers. It's not only about chips. There's a lot of moving parts when you build a data center, and the US on its own cannot separate itself from China, and China as well needs the US, no matter what. So there needs to be some kind of off ramp. There needs to be like a grand bargain, a big negotiations between both, uh, because no matter what, there's a business relationship between both, which is very valuable on both sides.
So when you look at it through the credit market lens, right?
Yeah.
So you have China, you have US, that's the obvious one. They can't really decouple. They have to figure out some kind of grand bargain. Where do you land in the camp from your perspective and from the credit market standpoint of what the other who could be another major influence in that conversation, whether it be Japan with what they're doing, whether it be Russia, who is the other piece that has to be part of that grand bargain?
I think I think if you think about it, like maybe we're facing a new Yalta, and for both the Chinese, the Russians, the U.S., Europe has become irrelevant. They're just not in the game, and no one wants them really at the table. When Callas or von der Leyen wanted to visit Xi, he sent a bus, no official treatment. They just don't care. Okay, they're just like, okay, no. Callas is trying to
It's
reach out to
so
what?
interesting, which is so interesting, and I'm really curious from a European's
Yeah,
perspective. It's so interesting because that's the first time that's ever happened in the
yeah.
history of humanity.
Well, not really. Well, you
Maybe.
see, yeah. Well, we're really moving towards a new multipolar world, and there's nothing that can stop that train. I mentioned the book by Angus Madison. Angus Madison told you that uh, 500 years ago, the most dominating powers in the world, trade-wise, used to be India and China,
Mhm.
and the world is switching east again because if you look at the concentration of populations and economic growth in the upcoming decades, it will be Southeast Asia, it will be Indonesia, all these countries. And innovation wise, I will never write off Japan because they have absolutely fantastic technologies in the likes of Honda, Toyota. They're very, very solid in innovation as well, the Japanese people. So, what I'd like to say is the three biggest players right now in the world are mostly United States, China, Russia.
And what is and so outside of the surface level things that I think are obvious about Russia, why other is it just the nukes? Is it just what is it about? Is it their energy production, even though they're having, you know
I mean, it's also the human capital because you take Russia, you take China, they have 30% of graduates in STEM, okay,
Mhm.
in science, technology. They have 30% of their graduates who are engineers. If I take US, it's 7%. So there's a huge gap. So there's a real scientific competition gap. On top of that, I would say
Do you think AI though normalizes that? I mean, now you have to know what questions to ask, but you don't necessarily need to know the answers. So,
yeah,
yeah, right? So, you know, and I think personally that's where we lost our way education-wise. You
yeah,
mentioned you read classical
absolutely.
language. We went through this whole road where we told everybody to go basically become STEM experts or whatever, that's the future, and essentially we created an industrialization of education that just taught you to repeat and get the right answer. We stopped teaching people how to think and ask questions decades ago, and then algorithms basically removed our ability to do it. Now we're going, "Oh my gosh, maybe humans should be able to think and cognitify and do all these things." So do you think liberal arts or those kind of things that Europe has been known for are advantages to come back in some regard, or do you think that it's relegated to the kiddie table now in the next world order?
No, I don't think so. I think there's still amazing scientific prowess in Europe and groundbreaking stuff. There's room for competitions. Europeans have shown that they have like still like some very very solid scientific. The issue is more with the political class in Europe than anything else. That's the major blocking road from my
So
point of view.
so how do you think Europe deals with that? Does it split up? Does the union does it
It's
become
difficult. I think that the chosen road, which was a good road initially, like a Europe of nation, has become much more centralized in the hand of people who do not have a real democratic mandate. Von der Leyen, she's head of the European Commission. She doesn't have a democratic mandate per se, and she's being more and more criticized. Same thing with Callas, which I think is not up to standard of what a diplomatic representative should be. She doesn't have the abilities for the role. And I think we can tease this, that like you see falling dominoes in the European political space. You've seen so many European leaders being replaced, and the popularity game is being lost by a huge amount.
What do you make of Latin America and like Milei and Bukele and some of these smaller examples, but where populism and austerity and fiscal discipline have kind of taken hold, or at least again, controversial as to where it's landed, but at least on the surface, it feels like it's heading in the right direction for the people that live there. Do you think that's happening in Europe? Do you think it could happen in Europe? Is it still too early? Are we still holding on to the way?
It will have to happen because if I take France, my home country, for example, most European countries such as Ireland, Portugal, Spain, Greece have done massive structural reforms, which were extremely painful. They took the bitter pill, swallowed it, and came back. Like Portugal, I was mentioning, 4 years of budget surplus, and they're in a very very good spot right now. Spain, the same thing. Ireland, the same thing. But France, no, they've postponed and postponed and postponed structural reforms. And at some point, you need to take the knife to the expenses and really look line by line, say, okay, this I keep, this I slash, this I keep, this I slash, and it has to be done. It has to be done.
There's been a lot made of the conversations, like you said, they sent a bus, but there's been a lot of conversations, whether it was Canada reaching out or whatever, where everyone's saying, oh, because of what current administration in the US is doing, we're forcing our allies to go pick the bad guy, like China or whatever. They're
Mhm.
going to go do. Is that practical? Is that reality, or
No,
just, yeah, I don't think so either. I just want to understand,
no,
because
China just built a very a speed train line between between Belgrade and Budapest. They financed the train road, so I don't think China is gonna walk away from their investment. And plus, they've also set up a very large BYD plant in Hungary. So no, I don't think it's gonna happen. There's too
those
many economics into play.
those things to me again are a playbook that they learned from us, right? Economic Confessions of a Hitman or whatever,
Yes.
or Confessions of an Economic Hitman, which is
Yeah.
a great read. A lot of people, they basically borrowed that playbook from us, and they did it in Africa, and they took over ports, and
Yeah. You
now
mentioned this
in
book,
Europe.
but there was there's a amazing book written by Dambisa Moyo. She's a former Goldman Sachs and World Bank economist. She wrote in 2014 a book called Why the West Has Lost, and she followed it about a book called Winner Take All, about how China set up the road to supply management dominance. And they did it. They just built block by block, and now they're totally in control of supply chain management.
So from your perspective, where are they vulnerable? Because I know a lot has been written about that too, but where do you think they're vulnerable? Is it on the demographic side? Is it on the debt side? Is it on the closed, economy side, capital flight? Where
I
where
think
is
capital flight, they know that that's why it's a great analogy, the Great Wall of China. A lot of people think that it's facing outward. I think the Great Wall of China is facing inward. That's why they have capital control, because I think a lot of Chinese people are dreaming about moving elsewhere with their capital to Canada, to New Zealand, to Australia, to some part of Europe. But having capital control is what maintain uh, everything together, and it's on purpose because they're extremely prudent in what they're doing. What matters most for Chinese is harmony. Whatever happens, they want to maintain the balance because it's such a big population. You have a lot of different ethnical differences, a lot of different dialects within China. So to manage 1.3 billion people, it's not that easy. So for them, they will do whatever it means to maintain that harmony. And you see it because every 5 to 10 years they do some purges, corruption purges. Guys starts, instead of taking 5% cut, they start taking 10, 15, 20%, and it goes out of control. So every 5 to 10 years, they execute some people, send a lot of people to jail. They're just doing like kind of mini resets every 5 to 10 years, and you can see it very easily by following what's happening with cognac and brandy sales. They collapse because corruption. You have a corruption. A corruption, how we say, a corruption drive to drive out corruption. So then you suddenly see a collapse into high end alcohol
Hmm.
because the Chinese government is decided to, okay, 5 to 10 years, we need to do a bit of a purge to put back things to a normal level. They know they can't get rid of corruption. They know
Why
corruption is everywhere,
is it
but
because
every
he
five to
stopped
ten
buying
years,
is it
sorry.
because he stopped buying as much cognac? That's why? When they that's where they cut back or
Yeah,
what?
yeah, yeah. You just have to look at how cyclical Rémy Cointreau, the French company, is the listed company is cyclical. Like every 5 to 10 years, you see a fall in the sales on the Chinese market because of these corruption campaign,
Does that happen
anti-corruption
across
campaign.
other luxury goods, or is it just
Yeah,
out?
yeah. It happens with luxury watches. It happens in the luxury space because every 5 to 10 years, you see the Chinese government taking a stand. They're just do a mini reset. They try to calm things down, and they know that it comes back again. So every 5 to 10 years, yeah, they go through these exercises of doing of cleaning up the house.
So you mentioned India, but you didn't list them in the, you know, high list of people to watch. How much of a pivotal role will India, their economy, their youthful demographic, they've got a lot of issues there,
Yes.
obviously, but how much of a role do they play, and where do they fit into this next world order, in your opinion?
Well, India has very strong economic growth. They have huge potential, but corruption has been a big issue, and as well, like I think there's a big difference as well with China, where like you used to have like a system of caste of different like different population selection within the country, which is still a barrier within India, and as well the issue of corruption on a wide scale. China didn't face the same issues because Mao basically just reset the whole society. He put everyone at the same level and got rid of his system of caste. So he was in a much better shape. Well, China was in a much better shape after the disappearance of Mao, with the arrival of Deng Xiaoping to start what China is today. India, it's a little bit more complicated, I think, but they have huge potential for sure. They have the brain quality for what's coming next. I think the whole region, Indonesia, Vietnam, is amazing in terms of growth. But it's funny you're mentioning frontier market because it's something I've been looking at. It's quite funny because I've seen recently an interview of Jeff Gundlach about his
Mhm.
asset allocation recommending 40% equities, and in that 40% equities, he recommends 100% with international diversification, no U.S. exposure. I was quite puzzled by that because
Hmm.
really expect that the dollar value to go down significantly. Uh,
So the
but
recommend was basically get out of the S&P and get into
yeah, that's what he was saying on that YouTube interview I watched. It was very interesting. But yes, you have some very compelling equity stories in
what
I
is
would
your
say
what is your
frontier
take on that?
markets.
I don't know what those emerging market equity indexes are priced at as far as where they
Well,
sit today. And then if currency, we kind of have to have a move down on the dollar where we weaken it for other reasons, at least in the short run, right?
yeah,
So we can pay off we can roll over our own debt. And ultimately, as a reserve currency, a strong dollar reserve currency doesn't work for the world for all the obvious reasons. So you have to
no,
keep that in balance. But do you think the drawdown, let's say there was a broader based drawdown of any kind, doesn't matter if it's a crash or if it's just a correction. do you believe that the emerging market side of that is going to bounce back quicker? Is that what Gunlock was saying, or what was the
No,
takeaway?
I think it's a country to country basis. He's very bullish on Brazil. I'm very bullish on Brazil as well because for a very simple credit guy perspective on that, like if you have rates around 14.5% and inflation at 4.5%, it's a no-brainer. Your net positive rates is around 10%. The P of the Brazilian stock market is pretty cheap, so I don't see the downside on that. I don't care about the volatility, but the rates of the central bank of Brazil are way too high relative to inflation, and rates are going to come down. And you see as well a very solid performance of the Brazil currency in recent months
So
and years.
explain that trade, explain that hedge or that trade in like plain speak. So you've got a 10% spread right now
Yeah,
that you think is fat because
yeah,
inflation isn't mandating their central bank to keep rates there. If and when we get any move at the Fed, then or before that, maybe they could lower them. So locking in now at that
yeah,
10% spread gives you that downside protection with a nice double digit return. And if you buy into low PE equities
yeah,
in that environment, as the thesis, and please correct me if I get this wrong, for the plain speak layman, is if I have this 10%, kind of thing, I could always sell as markets move, and as that price of my asset goes up, I can either keep the dividend or I could just sell it. But as Anthony always says, if you're going to stay in the asset class, you want to keep it because you're just getting the cash flows, right? You're getting
exactly. Yeah, it's about I would say from a carry and roll down perspective, Brazil is very enticing, even for fixed income to equities, for a very simple reason. In credit land space, 50% of your total return on a 5-year basis is based on your initial spread.
50%.
Yeah, 50% of your total return because it's based on carry and roll down. It's just bond mathematics. It's quite simple stuff. But for a comparison, if I look at U.S. high yield right now, you don't have any buffers. High yield is way too tight relative to investment grade. So would I buy U.S. high yield at the current levels? No.
So again, you're talking about junk bonds at the current
Yeah,
levels
yeah.
is
I'm talking about if you look at what's your net positive return relative to the 10-year versus US inflation? Like if you have like 2% inflation and your 10-year is at 440, okay, 1.4 net return. Whereas if I take Brazil, rates at 14.5, inflation at 14.5, 10%. Where do I prefer to be? From a carry and roll down, I would buy a 5-year Brazilian bond or 10-year and just sit on it. And as the
and
Brazilian central bank starts
what's
cutting
the rating?
rates,
What's the risk rating on that right now? Is that at AAA? Is that it?
no, it's roughly investment grade. Brazil is around investment grade,
Okay.
but
So
I don't see any. I mean, you have a large enough buffer to withstand. If you're buy and hold, you don't care about the volatility because you know that you will get back repaid at par after 5 years. But you get all the upside on the bond appreciation because of the carry and the roll down.
who do you think moving forward from your perspectives more important to where things go, Besant or Warsh?
Difficult to say. Difficult to say. Both have a very very difficult job.
How do you think Besant's been doing?
I don't think he has hit the target because he was aiming at like a 3% on the 10-year, 3 million more barrels, 3% net growth, and on the three targets he has allocated himself, he's failing on that.
Do you think we'll get there though? Do you think that's a matter of time and that directionally it's right? Or do you think he's kind of
I,
got his
I,
hands
I,
stuck?
well, it's very difficult because of the current fiscal trajectory of the United States is unsustainable. Something has to be done. That's why you see the 10-year at 4.40% because of fiscal discipline. And there's nothing the Fed can do on that. It's about the Congress uh, behaving more responsibly when it comes to fiscal discipline.
And in order for that to occur, and again, this is my opinion. It doesn't mean I'm right. It just means my gut level tells me in order for that to occur, you've got to get a whole class of people that have been there too long, have been
Yeah,
far too corrupted, are milking it for all the other on both sides of the aisle. But they're all going to point the fingers. But at the end of the day, Representative Luna been putting things out there about stopping insider trading. You have obviously all of the flack and pushback that came when Doge, everybody kind of waved at it from the GOP side, but basically wasn't really serious because they voted, the opposite direction. So they waved at it and said, yeah, it's good because they blamed the Democrats, but then they voted along with the Democrats more than they should have. So there's like this there's this majority of people that are still sitting in Congress in that example that are somehow either benefiting from that short-term thinking power grab,
yes,
kind of get to stay in place, or that are actually pocketing, which is also, I think, happening. Certainly we're seeing that now in all these independent journalism uncovers in certain states. But until that happens, there's not much the executive branch of the Federal Reserve or anybody
no,
else can do, because until we start to really just put people in jail, decrease the fraud, and then not spend it again. I mean, which is interesting because in some way I go, man, if we can eliminate just what we found in California
yeah,
that's fraudulent, and
absolutely.
with that
It's
tax
it,
base intact, like, you could actually really see
yeah.
this turn around in a hurry.
Yeah, same thing in France. I mean, it shouldn't be that difficult to just balance the book. You just need like a primary surplus to start gradually reducing the debt level. So you need an excess primary surplus.
Do you think we have uprisings, revolutions in Europe again? Do you think we have them here?
It's yeah. There's potential for this when I look at history books and look at what's happening right now in Europe with the rising cost of living and the tax level, which are really outrageous, even in France. They don't have any buffers left in French government budget wise. They've come to really the maximum limit they can tax people on,
Yeah.
and the spending is really out of control.
So, let's shift gears and talk about what you're writing about. What are you doing on Substack? And talk to us about kind of who you're serving in that regard, what you're writing. And by the way, guys, if you haven't already, go follow, give them some love for being here. Thanks for tuning in. Keep staying on. But I want to move into, what you're writing about, who you're writing it for, and kind of what your backstory on Substack is. How long have you been doing it? And kind
Yeah.
of,
Well, before I was on Blogger for many years, I started in 2009. It closed down. I stopped in 2020. Uh, I also published quite a few articles on Seeking Alpha. And
Mhm.
then I decided to start writing again because I thought Substack was a very good tool for that. So I started again in July 2022, and I just passported the people I had following me for many years on Blogger on Substack, and I was followed by a lot of professional on markets. A lot of former traders, portfolio managers, even some central bankers were reading my stuff because it used to be quite technical, I would say, because I was talking about like credit derivatives, about some specific strategies, about basis trades. And I started writing again, and I would say my signature trait is always using an analogy. It can be music, history, science, mathematics. It always has to be in the title. It has to have a meaning to what I want to talk about in my blog. So it's always a challenge to come up with some new titles and new ideas.
Do you have a favorite type of music? I'm just curious, like, do
Oh
you
no, I listen to a lot of different things. I can listen to jazz, classical music, house music, 90s music, new
just about
wave. I listen to a lot of different. I'm I'm extremely curious. I like to learn all the time from anyone. I'm always curious about learning new stuff. That's my thing.
It's a good habit to have in a
Yeah.
world where intelligence is being commoditized as infrastructure, because curiosity is a uniquely human trait, right? Our imagination is one of our intellectual faculties, and like every muscle, it's a good one to work out. So on Substack, most of your audience is either professional or institutional, but you're bringing forth these technical kind of analyses or these uh, papers with some kind of lens towards a historical thing that everyone goes, or pop culture, and everybody goes, "Oh, I know what that is," and then you're trying to draw the analogy so that people can kind of not get numbed out by the technical side of it. It sounds like what what's one of the pieces that you've written recently that did well or that you thought should have done better because it was really important? I know I've written stuff where you go, man, this is one I hope everybody reads.
Actually, it's quite difficult because I tend to have the exact same kind of readership numbers in terms of percentage. But anyway, no, I really it's always really a challenge to uh, to find new titles, and I like this challenge a lot because it's like when I write, it's like going to the gym. For me, it's a necessity. It's something I need to do because I muscle myself by doing it. If I
Mhm.
compare what I was writing in 2009 compared to what I'm writing now, I mean, I've learned so much in between. I've read about, I don't know, maybe 8,500 to 9,000 PDF and different research papers in between. I've read so many research papers from sell side, buy side, uh, anything. I've read on a regular basis, cave cow research. Yeah.
Yeah, you mentioned derivatives actually in the last comment, and I wanted to go down that rabbit hole a little bit with you, because derivatives are really what became, as Buffett said, the mass destruction weapon
Yeah.
of the GFC. We we still have swaps, we still have all these things. We have large private debt
Ah,
issue.
private debt. We can
We
go
have
that way. Yeah, if you
we
want.
have large capex. We have
Yeah.
a lot of bets on AI,
Mhm.
continuing to go to the sky now into space. Do you see derivative risk? And if so, where?
Difficult to say about derivatives. There was a lot of things that was done after the great financial crisis, such as trade compression, which was a very big improvement in terms of reducing notional risk. That was a very big improvement that was put into place. Trade compression really alleviated the spreading of the risk. I see there's a lot of what is also, I think, quite destabilizing is the amount traded uh, on the option markets, like OTDE option market. Has gone insane. Like it looks sometimes like the market is turning into real 24/7 casino right now.
What
Uh,
is what is OTTE?
it's like a very short dated options.
Okay.
You've seen
Oh,
an
this
explosion.
is what Buffett announced the other day. I'm thinking this. He made a comment on the interview from Omaha like last week or whatever it was about. I think it was single day options, or it was like single day calls or single day puts. It was like the volume of that short duration option was
Yeah,
like 60 or 70%. It was something crazy. Like historically, we've never had that much. And he was saying that when the majority of options are short dated options, you are definitely in a casino. Is I think
yeah,
what he said. Is that what he
exactly. And you see it like with all these new. You see the volumes traded on Poly Market, on the Kalshi, on betting. It's for me. That's right. It's that's why we did a short video on YouTube with my friend Zoltan Zalias, and we called it "Reminiscence of Credit Operators," as a tongue-in-cheek reference to Jesse Livermore during the Roaring Twenties before the final crash in 1929, and I see a lot of analogies, uh, both in terms of the intensity of betting and trading with the Roaring Twenties. You see a lot of Ponzi schemes unfolding in the crypto space as well. You see M&A activity at record levels. You see record issuance of debt. So all all points to me, as well as rising dispersions in both equities and credit, towards the credit cycle turning. So you mentioned private credit. When there's too much money flying around, people start doing stupid stuff. They're over leveraged, overexposed. It's the same movie again. Too much debt being issued, too much leverage. So that's why I really think that the credit cycle is finally turning, and we're seeing in the private credit space.
So the this phenomenon, and I don't know the data behind this, maybe you do, but this phenomenon, I feel like started within the last decade. Obviously now we have Polymarket, we have these prediction markets,
Yes,
Coinbase, all these things you can basically FanDuel, into equities if you want, right? It's like, but really when you think about it as a cultural trend, it started beyond that, right? We have a generation of now young adults or midlife, even early midlife adults, that essentially grew up gaming and Fortnite and whatever, like V-Bucks, like Roblox, Minecraft. It doesn't matter what their medium was. They grew up in a gaming culture, and it's not gambling in a gaming culture. It's just in-game currency, and it's all very gamified and incentive driven. And when we moved into the mobile app era and we started to move banking and those kind of functions onto the device,
yes,
obviously the interface mirrored the best practices and UX of that. So like if you've ever been to Robinhood or if you've ever been to some of these investment apps that are now the default retail app, and sometimes even maybe, institutional people use them in their PA, right? In their personal account. These things are very gamified. Like when you buy
yes,
something, right,
absolutely. Yeah,
something explodes and gives you like a
mhm,
hooray and you get this
yeah,
dopamine hit for buying something, right? Or
yeah,
Coinbase tells you, you're up, you're down, da, 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 and it's like rewarding you with these incentives, or hey, make 5 trades today and you'll get
yeah,
entered into a drawing for 1 Bitcoin. And so all this gamification is driving behavior. And now if there's options markets there, and now you add AI and Claude and $20 pro plans to it and now you see on X or Twitter that a peer or someone built a trading bot or whatever that
yeah.
turned these cents into a quarter million happening every day. Do you believe that all of this just is not, and again, not analogizing it to the 20s, but is essentially it's just now this new enablement of new actors. Like we've now gone downstream to the majority that
Yeah.
never used to play in the market at all, and we're just enabling more activity, and there's no pattern recognition, or there's no knowledge of what a short-term versus long-term call option percentage of ownership should be. It's kind of like, I bought it
Yeah.
because it went up or down
Yeah.
or
Yeah. Fear of missing out. There's the trend is extremely powerful. If you look at the performance of momentum strategies since the beginning of the year, it's insane. If you look at the Korean market, the Kospi, it's like it's been up like crazy. It's been beefed up by retail in huge size, and I think people often don't see the disconnect between financial markets and the real economy. And right now, I think there's a huge disconnect between financial markets and the real economy. That's why sometimes I have like keen interest into looking into frontier market, because I look, for example, at banks in Kazakhstan, or even banks into Armenia and Georgia. They're trading very cheap, super high dividend yield, and for me, it makes total sense, because for me, a bank is the second derivative of the economy. And when you look at
what's
for
first?
example,
First
what?
derivative. So the bank is the second derivative of an economy or of a
Yeah.
local economy. What's the first derivative?
Well, the first derivatives, it's just the economy itself. So it's like a
Okay.
bank. Yeah, a bank is a leverage play on the
No,
economy.
okay, gotcha, gotcha. So the
It's derivative.
first one
Yeah,
is the actual economy,
yeah,
and then the bank is the second derivative of that.
yeah, exactly. Because let's say I look at with keen interest into these banking institutions in the places like Kazakhstan, Armenia, Georgia. They're doing amazingly well, but it's not based on fear of missing out or intense speculation. It's really based on real economy, because if I take Kazakhstan, for example, GDP growth is 6.4% a year. If I look at Uzbekistan since 2002, annual growth rate was around 6.8%. So for me, as a value guy, long-term guy, I just buy it and put it on a drawer and wait 10, 15 years. I don't have to look at my trading screen on a daily basis because the equity exposure is based on fundamentals. That's what I want to tell you.
So the practical side of this part, then. So A, what is your framework for assessing whether Kazakhstan is going to be around in 10 years, right? I'm
Yeah,
thinking through risk, but in like a
yeah,
plan kind of way, because I could do that, but then something could happen. Putin
yeah.
could get an appetite to go rebuild the Soviet Union and, not stop at Ukraine
Yeah.
and all that fear, right? But like what is your framework for picking those? Like how do you assess them? Where do you look? What are the metrics you care about? And then how do you execute? Like where does someone that doesn't know what you do or doesn't have 30 years in banking, how do they go buy Kazakhstan bonds? Like I wouldn't know how to do it.
No, I'm not buying Kazakhstan bonds, but equities, yeah. I have exposure,
Okay.
for example, the Kazatomprom, which is a uranium play, for a very simple, like a Buffett scarcity move. Why? Because Kazakhstan is 44% of the world's total uranium production. There's no uranium in the world without Kazakhstan. They have 40%, 44% market share. So, okay, I see that China is building 250 nuclear reactors. There've been some agreements being signed between India and Kazakhstan. Everyone is trying to start again nuclear power in Europe, in Canada, in the United States. So these guys, they need uranium. Who's the largest provider of uranium in the world? Kazakhstan. Okay. Do we have a equity listed equity on uranium? Yeah, it's called Kazatomprom. So, okay, yeah, I just bought it, and
Okay, so
it's
I'm gonna break down the framework. I want to unpack the framework for following it, right? First thing was the curiosity
yeah,
kicks in, so that be curious and go first principles, which is, a lot of people are starting to do now, right? What is needed to do this thing? So if I believe that AI, regardless of a pause, if I believe that that is going to continue to scale and is inevitable, regardless of whatever pullbacks, what is needed? Well, energy is needed. Okay, well, what makes energy? Well, there's different ways we can make energy, right? Sun, solar, wind, uranium.
yeah,
Okay, or I mean, nuclear. Well, okay, what makes nuclear energy?
mm,
And who's got the most of it? Well, China has the most of it, and then these other reactors, and da da da. Okay, so where do they buy their materials to make the nuclear energy? Well,
yeah,
they need uranium. Well, where do they get that? Who's the number one? Okay, Kazakhstan. Interesting.
yeah,
Then the framework was okay. So now I've identified a commodity, uranium,
mhm,
coconut trees in
yeah,
Indonesia. If you follow
yeah,
Matt Ross, because I love giving because he's talking about these
yeah,
natural economy equivalents. And so you go, okay, now I have the commodity. Now I've identified the number one player. So if it's saltpeter or if it's like pesticide,
yeah,
for principles, then maybe I'm looking at Morocco and I'm going, wow, they make 60% of the world's salt, whatever it is.
yeah,
So then I go, who's the publicly traded company? That was the third piece of that. Who's the
yeah,
publicly traded company that sells the majority of Kazakhstan's 44%? And then you find that name and then you go buy it.
yeah.
Okay. And what kind of diligence do you do when you look at that, you know, filing? Is it different than what you do on a US equity? Is it the same? Are there
No,
reporting?
no. Well, yeah, it's exactly the same process, but I really look at long-term trends. So, okay, nuclear is a long-term trend. You don't build a nuclear plant in 2 years.
Right. That's not something that
So,
happens overnight. That takes years,
exactly.
decades, right?
I tend to be a value player. I don't do day trading because I don't have the time and spend all my day on the screen. And I like to look at, yes, this kind of long-term macro. I would call them macro global plays because it fits a right narrative. So I know that nuclear would stage a comeback after years of stupidity in Europe, for example. I think one of the most stupid decisions ever made was when Angela Merkel in Germany decided in 2011 to stop nuclear energy in Germany. That was one of the most stupid things ever decided by a prime minister. So she did it anyway. Okay, fine. Now they're saying, Merz, the Chancellor Minister said, "Oh yeah, we did a big mistake on that one. Great, it took you quite a few years to realize how stupid you guys were. So okay." So now they're looking at restarting the nuclear programs in Germany via Siemens, who's as well in the business in building nuclear plants. But they need the supply, they need the material. So it's the same thing when you had like the gold rush. Who made the most money in the gold rush?
Well, yeah, the funny thing is we were just talking about the picks and shovels, right? But what you're doing,
Yeah,
you're saying, okay, but there's another way to play that because when
yeah,
most people hear, oh, make the picks and shovels, like, okay, so I'm going to sell the picks and shovels to the people that are going after the gold rush. If the gold rush is AI or if the gold rush
yeah,
is whatever it is.
yeah,
But then it's like, okay, well, what is in a pick and what's in a shovel? Well, there's
yeah,
wood. Okay, who has the timber? Who has the right? Who has the iron or the
huh,
copper? Right. That's the other side of it. Is okay. I'm not even going to worry about selling the pick and shovels. I'm just going to figure out who supplies the people that are going to go out and try and sell the pick and shovels,
yeah,
and what's that choke point? And then how long does it take to grow a tree? Or right? And then how many
yeah,
trees do you need to sell that many picks
exactly.
and shovels over the next 10
Yeah,
years? And, oh, it should have started 5 years ago, and it didn't. So this is, again, I think this is a really interesting enlightenment around just the opportunities that exist are actually massive when you think about forget whether the bubble is a bubble everywhere or not, because
yeah,
the opportunities of scarcity that are physical
yes,
constraints against
absolutely.
our infinite ability to invent new things are where the arbitrage really is if you take a 7, 5, 10-year worldview. And what I really wanted to kind of wind up with is let's say that you pick 4 or 5 things, whether it's coconut trees, because they take 7 years to grow and they're going to be extinct in 10 years and we can't live without them, or whether it's uranium or whether it's whatever the thing is. And you start to pick 4 or 5 of those things diversified, and you're going to go take 7 to 10-year bets, set it and forget it. And now you're rich. On paper, 10 years from now, you're rich in reality. How do you live day to day? Where does the cash flow? Where does the bond market? Where does
Yeah.
some of that fit in?
Well,
Because you already
that's
mentioned
what.
right?
Yeah,
It's spread, right? So how
yeah.
do you
That's why you need like I would say you need to have three different drawers. You have the long term drawer, the medium term drawer, and the short term drawer. Sometimes you see opportunities that are too stupid to avoid. One of them was like December 2020. You had the coal players such as Peabody Energy, Alliance Resource Limited Partners. They were trading at $5. And when I look at that, I was like, this is stupid stuff. It's just like, it's just being handed over. So, yeah, I recommend it to my clients at the time. Buy these guys at $5 because it makes absolutely no sense. The level, the price level it's beyond stupid. It's
this was
beyond
after oil went to negative 38 bucks a barrel. Is that what happened?
2020, $5.
Yeah, April of 2020 was when oil went negative per
Yeah,
barrel
yeah,
for like a day.
absolutely. But talking about early December 2020, uh, Peabody was trading at 5, Alliance Resource Limited was trading at 5, and the
Right.
dividend yield on Alliance Resource Limited has always been around 10% a year. So it was just stupid. It's just like, yeah,
Yeah, so I mean, you're talking about, May, June, July, August, September, October, November, December. You're talking about 8 months after the black swan of negative barrel oil.
yeah,
We still have energy stocks priced way below where they should
yeah,
be, and that's just because everyone shook out, got afraid, and the whole asset class got punished, but quality companies were just
yeah,
riding it out, and so it became like a no-brainer, so you say do that.
absolutely.
So what bucket does that go in? That's the short-term bucket, or that's just the
That was medium term. Short term bucket, I would call it special situation. You had like same player again, Peabody Energy making a bid for a large miner, and it went belly up because of there was an accident in the one of the mine they wanted to purchase, and they invoked a MAC clause. So they basically bailed out from the transaction, and the market was forecasting that the transaction would go through, that it would eat a lot of cash from these guys, Peabody. And because of the termination of the trade, the bounce was very violent. Like we're talking in 6 months between 90 plus 90 to plus 120% in 9 months. So sometimes, yeah, you have things that pops on in front of your skin. You said, I have to put it. I can't avoid this. It's just it's a trade I have to put on because it's too stupid. So you just can't avoid it. You have to say, okay, I'm just gonna put this one on and keep it for like 6 months to 9 months.
What's your litmus test though for whether or not you're gambling? Like, how do you like when you say that? And I've had that feeling where you
Yeah,
go, "This
no,
obvious."
it's not gambling because I looked really into the financials, look at the levels, look at all the moving pieces. So
Okay, so
I,
in other words,
I
when you get
always
gambling,
I always the first question I ask myself, what's my downside?
right? Okay, so
What's
by the
my
time you
downside?
get that feeling,
Yeah,
you've done what you consider a rigorous look at why not to do it. In other
yeah,
words, you kind of almost arrive there because you
yeah,
go, okay, I'm not going to buy this. Why am I not going to buy this? Okay,
yeah.
wait, I can't
I
come up
did.
with a reason.
Yeah, I had the same approach, and I didn't put the trade on. I really thought that the thing was still like churning so much cash. It was stupid price, but I didn't see any catalyst. It's PayPal. PayPal is generating $5 billion in free cash flow. It's a cash machine. It's been down by 90% for the last 5 years. Uh, they just had the change of CEO, so I looked into it and I thought it was a value play, but in fact, when I deeply dig into it, I realized it was a value trap,
Okay,
and I couldn't see the catalyst for a very meaningful
that's
bounce of
to
the stock.
monetize or because it's hit its peak growth, or what was the value trap that you saw? Like it was throwing off so much cash that you thought there's no way this isn't going to make
Yeah,
sense. Then
well,
where
yeah,
was the trap?
the trap was rising competition from other players and the fact that they couldn't break out significantly from where they were. They're just like kind of in limbo. They have
So
a new guy.
the narrative was either not there or didn't
Yeah,
jive. So
yeah,
you do look at the narrative. You look at the
yeah,
narrative arc and say, is there a
yeah,
story here that's compelling, or is it just mm,
yeah. And I looked into it. I really because I was really surprised. Okay, why am I getting wrong on that one? What
mhm.
am I getting wrong? And I will really looked into it. Okay, these guys they generate $5 billion of free cash flow. Not a not a short, not a small amount of free cash flow. Uh, they're trading at very cheap levels. They've been down 90% in 5 years. What am I missing? What am I missing? And I didn't see the catalyst. So it's still on my radar, but I don't see any catalyst. It's just like,
Right. So in
okay,
other words, if those fundamentals, if those things stay in place, you're still watching it, but
yeah,
there's just nothing that's convincing you that it's going to change. There's going to be this
yeah,
reinsertion to the
yeah,
vector that you think is there, because certainly cross-border flows, like the need that they fill is only going to continue to grow. It's not like their market is dying. Their market
no,
is going to explode, but they're now kind of this entrenched player that has all this free cash, but that other upstarts are kind of starting to eat away and they don't have a story. Maybe the new leadership needs a little bit more time. Maybe they need to
yeah.
clean house.
Maybe they will be taken over by some external bidder, private equity firm, or whatever. But I didn't see the catalyst, and I moved from value play to value trap, and because in the end, my conclusion was, well, my timing, I don't know what's going to happen, but yeah, it's going nowhere for the moment. Although it's extremely cheap value wise.
It seems like the scarier thing to me would be if, because I haven't looked at that one specifically. I mean, obviously I know the company,
Mm,
but I wouldn't be able to speak to their numbers. But based on what you said, if the stock's at a 90% to LBO that right now, I guess with rates where they are, that's the stalling point. If rates were lower or come down a little bit, then I would imagine the LBO class would be up,
yeah,
because you wouldn't have to make too big of a tender offer if it's trading where it is right now to get
no,
a deal done and take that private, and then you could do some things. But you need the debt to be cheaper.
Yeah, maybe. But yeah, I'm still sitting on it. I'm still watching it on a regular basis. But yeah, I didn't see anything that made me jump into it.
Well, green mail's illegal still, I think, but maybe that's the next green mail opportunity.
Maybe, maybe,
Anyway,
maybe.
yeah, interesting. Well, I see your friend Zoltan, I believe, joined, and so he must have heard you mention him earlier, about
Yes.
narrative. So, let's wind up with this. Wh what are the things that you go to for your research as you're writing stuff? Are there, like, a couple dozen, places that you kinda start with? If so, what are your favorite, tools or places where you dig in for those PDFs for those kind of.
Oh well, yeah. I do have some subscriptions. I do get my hands on some research information. I read a lot of research which I found of interest. I also subscribe to some Substack which I found of great value for sure. I read a lot of different Substack, and I'm highly I would say have been highly selective on X. I follow some very good accounts, and throughout the years I've been like building and building and building the people I'm following because of their amazing output of information. So I'm
Yeah,
getting a lot, absolutely a lot of good intel from X for sure. Substacks, there's so many good quality guys. There's some very good as well podcasts. I'm always listening to Louis Vincent Gaff from GaveCal whenever he does an interview on YouTube. Jeffrey Gundlach as well is a guy I follow very closely because he's very cute on credit. Uh, there's a few people where the quality is outstanding, and I think that's what has been the really big change in the last, I would say, maybe 10, 15 years. Uh, Mainstream media has lost the game because now, thanks to Substack, YouTube, you have some very good people uh, displaying their skills on both Substack and YouTube. You have amazing talent out there, really solid professionals
well,
with
I think
great
as
knowledge.
the element of being able to also read as well as watch or listen if you want it read to you, the
Yeah,
interface gives you the ability to do a deeper dive. I think you're right. I mean, there's X is undeniably either noisy or very valuable if you
yes,
curate it. So it can be it's very good for kind of like the squirrel. Like what should I look at? But then a lot of times the handful of folks that are out there using that to then draw attention to the 7,000, 8,000, 10,000 word thing or the 3-hour interview, it's priceless in my opinion that way because I discover someone, whether it's you or whatever, and then I can kind of go deep on your publication. And before I've even decided whether or not I want to do something else with you, I kind of really know how you think, I've read 50,000 words, which is a book, right? Even if I've
yeah,
done it in 10 posts. And so, yeah, I don't see any stop of that. I think this vertical on Substack is only going to continue to compound with
yeah,
talent.
yeah.
And, and curation is gonna be a key. Well, it's been wonderful to get to know you a little bit
Thanks,
here, and, thanks for joining live for all those who are in the live chat. For those
my
listening to
pleasure.
it, please subscribe to Mr. Martin Tixier, Macronomics. That's the Substack. Wealth Matters to Me. We're always here doing live streams multiple times a week. We drop other episodes. We do long form articles. If you're not following and subscribing, we'd love to have you. But thank Martin for being here. Give him a message. Send him some comments. Let us know what you liked. Let us know what you want him to answer that he didn't have time to or that I forgot
Absolutely.
to ask because you can use the comments section to kind of pick up the interview where we left it off and let's go
Yes.
deeper together. But Martin, thanks so much for being on the Atomic Level.
Thanks for your time. My pleasure. It was great
All right.
to talking to you.
Best of
Take
luck.
care.